This week, we have ID solutions in the UAE built on Hedera. We have Saucerswap's beta app launching, a Hedera-backed currency exchange, an all-new shark bites for you, Red Swan, and of course, pretty much unprecedented volatility in the crypto market. Welcome back. I'm Brandon, the HBAR Bull, here once again to bring you the latest in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So let's start off with a shift that I'm starting to see. We've always had the tech, and after that, we were ideating on different use cases that could launch on the network. And for the past few years, we've been building and launching products. And of course, all of those phases are going to continue, but now what we're going after is actual users, and that's exactly what we're seeing. Last week, we highlighted Dropp bringing Hedera payments rails into convenience stores and gas stations at the point of sale, which has massive potential to onboard new users. This week, we have another application that will see new users leveraging the network at scale. It came out of the Hashgraph group with Beeha, the UAE's leader in sustainability and digital transformation. The collaboration will introduce ID Trust, THG's enterprise-grade self-sovereign identity platform built on Hedera to that MENA region. This deployment marks a major milestone in Beeha's digital transformation roadmap, laying the foundation for a connected, trusted, and privacy-first ecosystem that spans environmental services, energy, real estate, smart cities, and healthcare. The CEO of Beeha said, "For years, we've been committed to the principles of sustainability, technology, and socioeconomic development, which is why we're the first to implement a digital ID solution in the region across our growing ecosystem. This is a foundational step towards creating a seamless digital experience for our employees, customers, residents, and partners, and one that aligns with the UAE's vision for a smarter, more sustainable governance." Kamal Yousefi, the co-founder of the Hashgraph Group, added, "The MENA region continues to prove its innovative leadership when it comes to implementing cutting-edge digital technologies. Our mission to drive global adoption of Hedera DLT solutions through partnerships such as the one signed between THG and Beeha reflects a continuation of Hedera's long-term commitment not only to the UAE, but to the wider GCC region, Africa, and elsewhere across the globe." Courtesy of Ryan and the Genfinity team, we again have Khalid, the CEO of Beeha, talking about their smart cities and this Trust ID solution.
So where are you guys at on that path for the smart city, and what's that going to look like?
So for the smart city, you're looking at the whole ecosystem will be concentrated there. What do I mean by that? So when we're looking at the construction, looking at the roads, road base, we're looking at using road base coming from recycled rubberized asphalt from our tire recycling plant. When we're looking at some of the other road base, we're looking at the construction waste. So we're looking at using a lot of the recovered material in building the city. We've already appointed the architectural firm Zahid Architects. The same firm that designed our building is now designing the master plan. The master plan for the city is actually around the headquarters that you see here. So this will be announced in the next 2 months or so, the project. But we're also looking, okay, how can I power the city? Building it, I'll use construction material. But how can I power it? I want it to be a net zero city. Across the road is all my recycling facilities. So we have our waste to energy, has 30 megawatts. We're now building phase 2, another 30 megawatts. And keep in mind, 30 megawatts is enough to power 20,000 homes. So now we're looking at another plant. Also, our landfill is located there. That's going to have 120 megawatts of power. So we'll be able to power the city. Also across the road there's the sewage treatment plant, as well as the industrial wastewater treatment plant. So we'll be able to take treated water and use it for irrigation. So to create the greenery and landscaping around the city from treated water, power from renewable energy, construction from recyclable material. And then we're looking at, okay, we'll power all our EV chargers that we actually provide to ensure the mobility is in place. We're looking at how to use AI to create a better quality of life in the city. So this city will have retail component, will have boulevards, parks. It will be a fully self-sustainable city and a model of how a city of the future could look like. It's more of a town than a city, but we call it a city. It's going to have approximately 2,000 units. A mixed-use development is going to have some office space. So it's an exciting project. We're also, in parallel, building a twin city, a twin digital city for this. So we're even imagining, okay, should we have digital identities? So decentralized digital identities for every residents of the city, and what value would that person get from having that identity. And this is where, blockchain comes into place. So we're starting, and this is where, our discussions also with Hedera are coming into place. We're starting these decentralized digital identities. What services could we provide? We've been looking at blockchain for at least 10 years, how we can utilize blockchain technology in what we do. And we've actually done some use cases already in the past. And for us, looking at the Hedera blockchain, looking at something that's secure, fast, scalable, fits in very well with what we want to do.
A couple weeks ago, we had an interview talking about one of the other Hashgraph Group products, and that was Transact. Of course, this collaboration hinges on their TrustID product, and even though Beeha is their first public customer, there's other potential customers for this product as well. I wanted to give my take and address something that I saw floating around in the Barbarian community. It stems from a very close vote that took place in Switzerland, where the Swiss voted to allow creating a voluntary digital ID. Now, I do have to admit these digital IDs make me a little bit nervous, and I like the fact that this is voluntary, but if it's going to happen anyway, I want it to be built on Hedera. The reason I bring this up is there was a video that was put out by Cheeky Crypto. He asserts that the Swiss digital ID is happening on Hedera. Now, I listened to the video and I didn't hear where he cited anything in particular, and I couldn't find anything confirming that this will use TrustID. When asking around about it, I was sent this LinkedIn post, but Matthew is a Costco IT manager, not part of the Swiss digital ID program. So for now, I'm just going to chalk this up to wishful thinking, but I'm sure the Hashgraph Group is lobbying hard to get this business. Regardless, it's exciting that THG's products are getting real customers, even if we haven't gotten to the sovereign level yet. And I think if it is done at the sovereign level, it needs to be done with a lot of care. Now, another piece of massive news that comes from another team that we interviewed recently, and that's YieldFX. YieldFX is a digital finance platform bridging traditional finance with DeFi, and this week announced its Hedera-enabled decentralized foreign currency exchange called Flex. To explain in more detail what YieldFX is and what they're trying to accomplish, here's their founder. Can you explain what YieldFX is and why it's needed?
Absolutely. So YieldFX is a DLT-based bank deposit product that gives retail investors instant access to high-yield deposit accounts in different parts of the world. YieldFX offers a compelling product experience geared more towards today's tech-savvy or app-savvy investor. There are no lock-ins or minimums. Interest is credited on a daily basis. The interest rates are market-beating. Investors can also swap between different currencies in real time with zero fees, low FX spreads, and instant settlement. In essence, with YieldFX, investors can trade foreign currency deposits with the same simplicity as they would stocks on an app like Robinhood. There are obviously a number of other products out there, or money market funds or securities. It's so important to understand that while the YieldFX deposits are represented as currency-specific tokens, the deposits themselves are held by a global network of partner banks and are insured, making them the YieldFX investments both safe and a lucrative alternative to other digital investments.
Flex is introducing a hybrid market-making model that blends on-chain AMM liquidity with off-chain institutional liquidity providers. This dual setup deepens liquidity, tightens FX spreads, and delivers better pricing and execution for users of the exchange. By using regulatory-compliant tokenized deposits for settlement, Flex will enable seamless on- and off-ramping while cutting transaction costs. Depositors can even earn extra yield through single-sided liquidity without facing the impermanent loss that usually comes with DeFi. This is similar to the lending mechanism that we see on Bonzo Finance. The launch also brings the new YieldFX token, the backbone of the ecosystem, which powers transactions, liquidity borrowing, margin maintenance, and rewards for both depositors and liquidity providers. I do have a few quotes from the teams that are involved. The first one coming from Rajiv, the founder of YieldFX. He says, decentralized FX markets is the holy grail for the crypto industry, but most approaches are dogmatic and unable to break into the mainstream markets. Flex, with its novel fluid liquidity model, has the potential to break through and lead the way. Doug Jordan, the co-founder of YieldFX, added, we've seen the world's largest banks benefit from FX spreads and carry trades, while retail investors and small businesses are shut out. YieldFX changes that by giving individuals and institutions a simple, secure way to access high-yield deposits and low-cost FX trading. This launch is about leveling the playing field. And finally, Greg Bell, the chief business officer at the Hedera Foundation, said, "The launch of the Flex Exchange represents a pragmatic application of blockchain technology to address real market inefficiencies in foreign exchange. Hedera's infrastructure is purpose-built to support these regulated, scalable use cases, and we look forward to seeing YieldFX bring accessible currency yields to a global audience." So there's no lack of significant development going on in the Hedera ecosystem, regardless of what's happening in the rest of the crypto space. I have a lot of other things that I want to jump into, but first I want to get to an all-new Shark Bites. This one ran a little bit long, so we're going to break it into two pieces, just like we did with the interview with John Kiko last week. We're going to start off with Rob giving a recap of everything that happened at the Swift Sibos conference. Rob, welcome back. I hear that you've been traveling around the world. Where are you calling from today?
Oh, I'm back at home in Sydney. So, we went to Sibos in Frankfurt a couple of weeks ago with the Hedera team. And I took the opportunity to work from my place in Italy. So, back in Sydney now, though.
Your happy place. But yeah, I want to get into Sibos a little bit. It looked like you were talking up there on the stage. I'm sure you made plenty of good connections. I'm sure there was plenty of really good conversations there. Can you give us a recap?
Yeah, well, it's a funny story. I'll come to that in a second. But so Sibos is, for those who don't know, is a kind of an annual, a massive annual conference that is hosted by and run by Swift, with participation from the world's banks. So it's very banky. It's very traditional finance. In the past, it's been discussing very dry subjects, fraud and regulation and compliance. So it's not your token 2049. There's not a single degen in sight, not a declared one anyway. However, the change in global regulatory posture towards stablecoins via the Genius Act and via MiCA in Europe and the other frameworks that are being developed around the world has kind of created a real sea change, I think, in attitude at these conferences. And you've got central bankers and commercial bankers and payment system providers now all talking about these, the subjects around digital assets, stable coins. I estimate probably 60% of the panels and keynotes and discussions were about how the traditional finance industry is adopting or adapting or assimilating this new form of digital money. I mean, it's incredible to hear central bankers talking about stablecoin strategies and banks as well. So that was a real shift in tone and attitude. There was this big announcement that came out of Swift around them building or prototyping their own blockchain, which is a real shift. Swift is a messaging platform. It's a financial messaging platform, and that has allowed banks for decades to ensure that there is a secure set of messages between them, which then gets kind of settled in terms of money. And Swift have worked and looked at blockchain technology in the past for reporting and for clarity of that kind of the movement of money, rather than operating on a blockchain for the movement of value. This is different now. They're now looking at discovering and prototyping what it would take to implement a blockchain that has a value transfer. It's a long way off. The announcement suggested that there was kind of immediacy to this, but in my discussions with people I'm working with at Swift and through other announcements during the conference, it's quite apparent that they're entering a period of discovery and prototyping, which might take 2 or 3 years. We shouldn't anticipate anything very quick, but clearly, we're with AP Plus. We've been working with Swift under Project Acacia. They're keen to move into trials and real money trials for other aspects of things that they're looking at. So clearly, they're moving in the right direction. Whether they'll move quickly enough to be relevant in a future where value runs on blockchains and stablecoins and deposit tokens and yield-bearing money market fund based currencies are proliferate everywhere. That remains to be seen. But it's certainly a really, really good indicator of how the traditional finance space has finally woken up to both the threat and the opportunity of what distributed ledger technology and movement of value on these new networks presents. So that was really good. Go ahead.
No. I was just going to say that I would think Swift brings trust to that value transfer. That is their role. And I would think that stablecoins and DLT technology would be a major disruptor for them. And if they aren't able to pivot in the right way, they could really be challenged here.
Sure. Yeah. And they are an organization that has hundreds of banking members, if not thousands. I don't know the numbers these days. In order to implement new technology, and remember, this is a change from a messaging platform to a value transfer platform. So it's actually quite a significant shift. This is a new area of business that they're seeking to move into. Will take a lot of movement from a lot of those members as well. It's the right thing for them to be doing, but I don't think it's an easy task for them to execute upon. But we'll see. It'll be very interesting to track. On the other side of things, I think the other aspect that I noticed was banks talking about real-world asset tokens. So the tokenization discussion is hot. They're all clearly looking to exploit whatever edge they think they have, or the markets that they're currently working in and moving towards a more tokenized future. So I think this year has been the first where I've seen this wholesale movement into kind of a discovery mode for some, and actually a proofs of concept and pilot mode for others on real world asset tokens. And it's it's a great place for Hedera to be, because of course we are very, very strong in terms of the cost and the security and the credibility of both those things. So we were one of a very small handful of network infrastructure providers and distributed ledger technologies at Sibos. And we were getting a lot of interest. We had dozens of meetings. There was a booth that was constantly full of people seeking to learn more. Plus the meetings we had were kind of back to back all week. So there's a very strong interest from the traditional finance industry on all those topics. And then it wasn't all about stablecoins. Obviously, AI was a very hot topic as well. But there was a very obvious shift from generative AI discussions in previous years to agentic AI. So, how do agents support business operations, movement of value, et cetera, et cetera. So, agentic commerce is this kind of evolution of that discussion. Obviously, very early days from a bank perspective to understand what that means in terms of the impact of their business. But it's a discussion that is actually being had in the open right now.
Is there anything in particular when it comes to some of those agentic AI conversations that really stood out to you?
Things like routing of payments, automatically, management of liquidity, triggering compliance actions on detection. Those sorts of things where agents can intervene quickly or can operate in a predetermined way based on their inference of context. So that's the sort of things that they'll be looked at within the banking context.
We've talked about this before, Rob, the difference a year can make. I mean, the regulatory landscape has completely shifted. And do you think that puts Hedera in a better place, considering we have been so focused on enterprise, where a lot of the enterprises were reluctant in the past? It seems like they're opening up to that now.
Yeah, well, enterprise more generally takes a while to, think its way into, a more mature strategic focus on emerging tech. And for me, it was very apparent that the time has come, if not already, certainly this year, where that is very, very real. Strategic implications and takeaways that I personally took away from the conference are that we're at that point of bridging between the legacy systems and innovation. It's no longer innovation for innovation's sake. It's actually now, how do we move from those very old systems. I mean, some of these banks are operating antique systems, and so it's hard, right? It's hard. They're not even in the cloud, right? So they're on-prem, old school technology, and moving away from that is difficult. But sometimes with the right investment and the right intent, it's an opportunity as well for these businesses to leapfrog their competitors. The Swift announcement was clearly a very strong signal indicator that was happening as well. This bridging from legacy to the new world. Standardization. There's a lot of talk about standards, which is necessary, I think, when we're discussing the world of traditional finance and how they would interoperate. AI is seen as, like I've said, an action engine, a way of agents automating, removing cost, and being incorporated into operating models, which is very exciting. I think there's a obvious reticence to charge ahead. These are regulated industries. Their compliance is really important to banks because they get slapped with massive fines by their regulators if they step out of line. So they're very, very cautious in terms of movement, but they know the direction of travel now. So I'm not suggesting that the world of banking will transform overnight, but I think it knows the path that it needs to be on. And finally, like I said, I think they've moved beyond the experimentation phase into a move towards production. That is hard. It has many, many hurdles, but I think they're on the right track.
So in part 2 of Shark Bites, we get into a few different things. One of them is the solution that Dropp is deploying, and we know that Rob is a payments guy, so he has some really good insights on that. But we're going to change gears here real quick. We're going to get into some Hedera DeFi. So you may have seen that the Hedera Foundation dropped a pretty exhaustive thread and blog post laying out their vision for the next generation of DeFi. The thread and post highlighted that Hedera isn't just faster or cheaper, but it's institutional grade. They argue that developers across the crypto space haven't lacked ambition. They've been limited by infrastructure. Hedera's unique setup with the token service, consensus service, and a scalable EVM collectively removes those limits, opening the door for regulated, high-speed, no front-running, low-cost DeFi that actually makes sense for institutions at scale. The highlights gas-free perpetual futures trading, regulated protocols built for compliance from day one, AI-driven portfolio tools that puts institutional strategies also in the hands of retail. Plus with the upcoming Hedera Improvement Proposal 1249 upgrade, which is expected to 10 or even 20x the smart contract throughput on the Hedera network, will unlock some additional really powerful use cases. Order books that finally work on-chain for regulated tokens, auto-rebalancing pool tokens that act like blockchain ETFs with micro-fee rebalancing, yield aggregation vaults that make sense for small investors without massive fees eating into your gains. The foundation calls this a temporary window of opportunity. Right now, they assert that DeFi users are turned off by high costs, slow speeds, and complexity. Hedera wants to change that, creating an environment where trading, yield, and compliance can all live on the same network. Now, a few of these things to make all of this possible are still in the works. We have getting that complete regulatory clarity, which looks like is going to happen through legislation over the next few months. And we also need that HIP 1249, which is going to help an awful lot with scaling, even on a single shard in the Hedera network. But it's clear what the Hedera Foundation wants. They want this institutional grade DeFi that is not just available to those institutions, but also retail. And speaking of focusing on retail, we have Saucerswap. Of course, they are also embracing bridging assets that institutions would expect, but will absolutely remain focused on retail. And this is exemplified by the beta launch of their app this week. For anyone out there who hasn't tried it, it's still in the testing phase, so while it's not difficult to onboard, it isn't quite as simple as it's going to be when it hits the app stores, so I put together this quick guide. As we've been covering, the Saucerswap app beta is live, and thus far it's exceeding my expectations. To get involved, the first step is to go to the Saucerswap Discord channel, then to Channels and Roles. Tap the notification at the top to join the mobile iOS beta, then scroll down a bit in the channel and tap on Mobile Beta. You'll see an announcement post that contains a link. Tap on that. If you already have the iOS testing app TestFlight, it will take you to a page to open the Saucerswap application. If you don't have the TestFlight app, I believe you'll be prompted to get it. Tap Open and create or import your wallet. I chose to import. Now, I would use an account created specifically for testing purposes only. There are 4 icons across the bottom of the app: Home, Swap, Stake, and Explore. For my testing, I wanted to trade from USDC, so I associated the native form of USDC, which was smooth. Then I bought some XSauce using the app. Saucerswap nailed the simplicity needed for the perfect onboarding mechanism, and though trading and staking is the main functionality now, that will expand to all Saucerswap services currently offered on the website in the near future. Then we have some new features that are going to be added in Q4 of 2025. We're going to get limit orders, and then in 2026 we're going to get perps. Thus far, I couldn't be more impressed with what I'm seeing, so go ahead, give it a shot, and get the word out. There are significant bug bounties that go along with this beta launch, so if you find anything, if you learn anything, make sure that you pass that on to the Saucerswap team, because it could be worth up to $75,000. I'm loving what I'm seeing across the board here. With the Trust ID solution with Beeha, we're seeing something we've been talking about for years, both smart cities and these digital IDs, and seeing how it can work together in kind of a controlled environment. We also have YieldFX bringing these tokenized deposits into Hedera DeFi. I think there's tremendous potential for that. We have Dropp, which I can't say enough about how excited I am for Barbarians to get out there and start using the Dropp technology, which of course is underpinned by Hedera at gas stations and convenience stores. And then, of course, Saucerswap making sure they're moving forward and making it easier and easier to onboard into the Hedera ecosystem, while at the same time looking at new assets like those tokenized deposits, stocks and equities through Swan, precious metals, and even real estate. And speaking of real estate, we got an interview with a team that had some big news come out last week, and that was Red Swan. So today I'm happy to have Ed Nwakati. He is the CEO and founder of Red Swan. Ed, it's been too long. Welcome back.
Thank you, Brandon. It has been too long, but thanks for inviting me.
Well, it's absolutely my pleasure. So before we get into the news of the day, can you just give us a reminder as to what Red Swan is?
Red Swan is a market-leading platform of tokenized real estate. We're a marketplace that brings together institutional quality real estate with investors that are looking to buy fractional shares of this real estate. Now that we're accepting cryptocurrency, it opens the door for anyone now with crypto to be able to convert their crypto into buying high-quality real estate around the world.
Oh, exciting stuff. We did hear some really big news last week. Can you kind of give us a rundown as to what was announced?
Yeah, we had our reveal last week where we invited a lot of our clients, our guests, our investors, our ecosystem partners like Hedera and Stellar, Franklin Templeton. And we had a release where we showcased about $500 million worth of properties that we've tokenized. Many were hotels in strategic areas, as well as apartment buildings, a fund that has mixed use assets in it, as well as we've, for the first time, tokenized $120 million worth of carbon credit forward, so we can actually help the sustainability of the ecosystem as well.
So does this mean that you're expanding out from real estate, or was this just to kind of offset the carbon footprint that you're dealing with?
Well, we feel that the carbon footprint actually is a responsibility. It creates a responsibility for real estate in terms of sustainability, allowing us to be able to take carbon credits that once were kind of the Wild West because they weren't transparent. It wasn't really organized. But now putting on the blockchain creates this very true, transparent vehicle that we could actually use to offset carbon assets. A lot of real estate emits carbon, but if you can now start to match the obligation that a property owner has with the actual carbon credit forward, now they can retire those carbon credits and create a neutral project, ESG neutral project, which we think is what many institutions are looking for.
Well, that makes sense. One other thing that I wanted to touch on is we saw that you were making this announcement from the penthouse of a pretty impressive looking building. Can you tell us a little bit about this building in particular?
Yeah, that was at Rivington on the hotel in Rivington, which is a 21-story high-rise hotel. It's an A quality hotel. They're renovating it to make it even a more luxurious hotel. But yeah, that was the first tokenized hotel in Manhattan. We thought it was very important to actually have our clients or investors sitting in the actual hotel on the penthouse floor where they can see the rooftops of other beautiful assets in Manhattan and know that this is now a real project that they're buying. There's no more metaverse or NFTs where you're kind of throwing things out there they don't understand. They're sitting in an actual beautiful high-rise hotel that they can now buy shares in. So it was very real setting for us. We also had 8 other assets that we've tokenized in hotels, one on San Clemente Beach, one on Playa del Carmen in Mexico. We have some in the Hamptons, on the East and South Hamptons. So all these destination points where we think people want to go for lifestyle, we're able to find a hotel we can tokenize. And we think that'll be great for the overall industry of Web3.
So, Ed, there's an awful lot of focus right now around making assets DeFi ready, making them available as far as securities within the DeFi space. And what I mean by that is not just tokenizing these assets and keeping them within, we'll say, a walled garden, but making them available on the DEXs that we all know and love. This is being done by Swarm when it comes to equities like Apple and Tesla. Are you working on making real estate DeFi ready?
The answer is that absolutely we are. We are working to make it DeFi ready by, first of all, minting these assets on EVM DLTs like Hedera, so that the actual smart contracts will be able to push these shares out to the DeFi world. We're also working with market makers that want to come on board. They can actually be the last mile for liquidity. So if somebody wants to sell, they would be the last offeree. But we're not just going to have one market maker. We're going to have 3 to make sure they stay competitive as well. So we're definitely getting up and gearing up for DeFi world. I think the most important part about the success of that is to have a lot of content, a lot of choices for the DeFi world to make. So they're not just looking at one property or one credit facility. They're looking at a variety of assets that they can actually choose, or even put those assets into a fund as a portfolio, so they can buy and also own all these assets for DeFi. We think that's going to be very powerful for the industry.
Well, my audience is going to be sick of hearing about this. I'm working now with Saucerswap, one of the big DEXs within the Hedera space, and we're looking at everything from securities to precious metals, even venture capital, bonds. We want to make sure that that people have access to every asset class possible, and that's the whole point, right? Democratizing these different asset classes, making sure that everyone has access to some of these asset classes that they may not have thought about in the past. So when we zoom out, Ed, looking at the full landscape, what are some of the strategies that people should be considering?
That's a good question. We had this nice discussion last week with Anthony Scaramucci. This fund, so much of his holdings are within cryptocurrency, especially Bitcoin. And we put the term of putting your crypto to work, actually borrowing against your crypto with the sole purpose of buying income-producing real estate. When you do that, you're actually making your lending costs lower, because now the borrower, or I should say the lender, has 2 forms of collateral they can hold on to. They had your cryptocurrency, which may be your Bitcoin or your Ethereum, plus the real estate. So you saw the crash that took place, last week with regards to cryptocurrency. Had people taken that strategy of borrowing against Bitcoin, buying into real estate, when I say buying into real estate, this is all income-producing real estate that produces a yield that can actually pay for the borrowing costs. So let's just break it down. For example, if you're able to borrow off of your Bitcoin at 6% interest rate, and you're able to buy a real estate fund like Altus is paying 10% yield, well, that 10% yield will pay the 6% borrowing costs, and that 4% arbitrage can be used to buy additional crypto, additional Bitcoin, for example. That's a very safe and low-risk strategy that I think we can get people to start practicing, because it will help, again, to take the worry and the volatility out of the crypto and make it more streamlined, so you actually start generating income while you're waiting for your crypto to go up in value.
It's one thing that I've been thinking about a lot lately is just the financial knowledge, the education that's been taking place. People initially get into crypto, but because of all these different strategies that are out there, people are becoming much more literate on all of the different investment classes out there. So, Ed, I don't want to take up too much more of your time here today. Is there anything else that you'd like to pass on that we haven't touched on?
Well, I like the fact that we are looking at the hospitality industry from the standpoint of lifestyle, and that we've convinced all of our sponsors who own hotels to create NFTs. These are NFTs. It creates a membership base for that particular property or group of properties. So now are they getting yield from the actual property that's going to be equivalent to or more so than the treasury, but also getting free night stays at that property, discounts on F&B and food. I mean, food and beverage, discount additional stays. And this is a 10-year term period that they're putting out there. We think that's going to be significant for the industry, just because now people get a lifestyle reward from their investment rather than just a boring return.
That makes perfect sense to me. Ed, again, it's been too long since we've had you on before. I'm really excited that you're continuing to do things with Hedera and build on the Hedera network. Good luck with everything that you have coming up, and we hope we can have you back real soon.
Thank you, Brandon. We love Hedera, and we're going to keep working with them, and they're very, very supportive in RWA, and we think that it's very important to continue this relationship. So thank you, and look forward to coming back on the show.
Now I want to congratulate another team that's doing amazing things across the space, and that's Hashgraph Online for their launch of their Registry Broker. This alpha launch marks the first agentic hub of communication connecting agents, MCPs, and data brokers across the open web. The broker indexes agents from all major registries, including Google A2A, Coinbase X402 Bazaar, Ethereum's ERC 8004, Virtual's IO, and more, all accessible through one open API powered by the Hedera Consensus Service. Builders can create a universal agent ID, connect instantly to any other agent, and start exchanging messages or state updates in seconds. The documentation, code samples, and standards SDK are available now on Hashgraph Online, and they have more coming. Next comes the MCP server registry, uniting every agent, service, and node across the open agentic web. So I think it's becoming pretty clear that these Hedera builders are not going to be denied. We have had success on a smaller scale, but I don't know which is going to be the first major success, but I know we're going to get one, and I'm sure there's going to be plenty to follow after that. So now we're going to shift gears again. We're going to get into part 2 of Shark Bites. Rob, as we've mentioned on here many times in the past, you're a payments guy, and we had some payments news come out from a team that's been building in the Hedera space for a really long time, but it has a different feel to me, and that's what came out of Dropp, that they're actually going to be putting some of their systems in convenience stores, gas stations, things along those lines. Did you catch that news? And if so, what are your thoughts?
I did. It's a great... It was a great news article. Sushil and Dropp continue to bring really innovative real-world use cases to market. In my experience, the integration of new tech with POS systems, so whenever you make a payment in store, there's some kind of device, a point-of-sale software system behind it. There's a handful of these software providers, and they're usually very difficult to integrate with because they're very guarded about their technology. So first up, kudos to Dropp for actually being able to do that. Breaking open that box, that POS box, and building their technology into it. They've got their pay by bank and pay by stablecoin options. So that means that the customer experience actually doesn't have to change if the merchant doesn't want it to, but it provides the options at the back end to actually start paying by stablecoin or the real-time, the FedNow real-time rails that Dropp has integrated with. This is within the context that card fees are rising, and that squeezes margin. I believe this is just in the US, so it's US kind of fuel stores. So paying for that with squeezed margins makes it increasingly difficult for those franchisees and merchant owners to operate. And so any reduction in cost is welcome. And the market's looking for cheaper, faster, and better alternatives to traditional card rails. Cards, if you pay by card on a traditional network, there are many interchange fees. And all of those fees are eroding the profits of those mom and pop, often merchants. So what Dropp are doing with Pinnacle, who are the POS provider, is integrating these new ways of making payments into the Pinnacle cloud-based POS system, and that will enable payments to settle instantly using both the real-time FedNow rails and Hedera's DLT. And I believe it's USDC. So if you hold USDC in your wallet, you'll be able to pay for your fuel with that. And as we know, that's super fast, super cheap. So merchants can gain up to two-thirds, I think, of lower costs on those transactions, which is significant. And instant liquidity, right? So the money arrives in their bank account immediately, not on the card network terms, which sometimes takes many days. I think it's great news. It's a great use case. It's a very interesting development that Dropp have brought to market, and I can't wait to see how it develops. I don't know Pinnacle at all, so I suspect what Pinnacle, and this is pure speculation, but Pinnacle won't only be providing POS software to fuel stores. It'll have other merchant-based merchant-based store implementations, and maybe it focuses on particular sectors. So in terms of a growth strategy, it may well be that Dropp and Pinnacle partner together through all of those as well over time. And this is just proving out the technology for both partners to make an assessment of what happens next. But like I said, that's just speculation.
What I like about this one, Rob, is, it's that using Hedera rails to be able to buy your coffee or buy your gas or whatever it might be. And I want to try to get a list of where all these stations are so we can get Barbarians out there and actually try to use it. I believe that their pay by bank actually does use an HCS transaction as well. And then, of course, HTS for the USDC. I'm planning on getting Sushil on next week. And also, I think the founder of Pinnacle as well. So I'll be able to ask some of those questions around that. But yeah, really exciting stuff on the payments front when it comes to Dropp. There's been plenty of news going on in Hedera in general. Is there anything else that you'd like to touch on before we let you go?
Is there anything you'd like me to talk about? There is so much going on, so it's difficult to know where to start.
Well, we have the Saucerswap app that just dropped. I'm not sure if you were able to use that. We actually had something from YieldFX. They're using tokenized deposits, I believe, and they're going to create an exchange for FX trading. There's stuff all across the board that I'm curious about that I'm sure you've been keeping an eye on. Is there anything that you want to bring up in particular?
I'm a daily user of Saucerswap and the web app, so I'm not in the app beta test, but I've seen some screenshots and it looks super clean and very, very sharp. So I can't wait to get my hands on it. YieldFX, what we're doing is we're developing out these new protocols, these developments on DeFi, and they're coming thick and fast now, really, really rapidly, which is great to see because it catches us up with the other networks who have had these sorts of protocols available to them for a while now. But it's again, and I think I don't know specifically this one, but it's a testament to how Foundation are really focusing on retail and pushing out a lot of these new developments.
And Rob, I believe, of course, you're into payments, but I believe you're into ID as well. You've created some solutions around digital ID. And I think by the time this comes out, there's going to be some news coming out of the Hashgraph group around that and the MENA region in particular. But we'll be able to talk about that the next time you come on. We appreciate, as always, you coming on and giving us your insights. Keep fighting the good fight out there. We know that you did a great job out there at Sibos, and now you're going to be continuing on with Heat. So once again, thanks for hopping on.
Yeah, and just one thing before I go, I mentioned a funny story. I literally turned up. My flight was delayed by 12 hours, and I didn't think I'd make the panel because it was first thing on the first day. So I called ahead, or I messaged ahead, and had an alternate put in, Andrew from Hashgraph. He was all mic'd up and ready, and it was like the Red Sea parting for Moses. Everything went my way. As soon as I landed, I went all the way through and literally turned up a couple of minutes before the panel was due to start. They mic'd me up. Andrew stepped down and gratefully shook my hand, and I went straight on. So that was an impressive way to start the whole conference. And I gave Andrew, huge kudos for helping me out, and he leads the Hashsphere team. So we had plenty of discussions around Hashsphere during the week as well, where I paid him back in spades. So it was a great conference. But the team is really the wider Hedera team. So all of the organizations are really firing on all cylinders at the moment. So it's really great to see.
Oh, well, Rob, you travel looking sharp because you looked great up there on the stage, and I know you did a great job representing Hedera. Thanks again for hopping on.
Thanks. See you next week.
Now, Karate Combat had gone quiet for a while, and I know there was a lot of people that were concerned about their survival in general, but they have been working behind the scenes, as I mentioned, and we saw some fruits of that just the other day. They're going to be coming back with Karate Combat 57, and that's going to be on Halloween. It's going to be featuring a middleweight championship fight between Kamzan and Weathersby, a clash between two UFC standouts in Uriah Hall and Marcus Perez, and the return of the man who is the owner of the most impressive finish I've ever seen in combat sports, and that's Rafael Alves. Now, of course, the Karate Token has struggled, but these events, enhanced by Ep-Only Gaming, are still the most exciting things that I've seen across all of sports. And reports of the death of the league have clearly been greatly exaggerated. I saw a couple mints this week with Wook's PFPs and Snobble Lehman's. The latter is tied to Wrap Dex that's focused on listing bridged versions of the top 50 crypto assets. Now, I saw one of the founders of that Dex catching an awful lot of crap for this, and it all stems, it seems like, from the fact that he's been involved with some other tokens that haven't done so well. Now, I don't know about you, but I've noticed in the entrepreneurial world, and has been shown by many quotes out there, that failure is all part of it. And I'm not saying the things he had done before are complete failures. You know, who knows? The awesome token may come back. And I don't know what to make quite yet of this Wrap Dex. I want to see it actually work in practice. But there's some really interesting things there, and I want to see it be a success. We should all want to see everything be a success. Should we consider, the experience of the teams and how they've launched tokens in the past? Absolutely. But I like people that are persistent, that keep trying things over and over to finally figure out what works. And I can understand frustration out there, but at the same time, we want people that are going to keep grinding and trying things over and over until they're successful. Going over to the Bullbarians, I've had a couple more sales this week. And of course, holders of this token get access to my token gated world, where I not only have early access to my content, but also some exclusive content as well. I do want to say thank you to everybody that's picked these up and supported the channel. I went through some bumpy times several months ago, and launching this collection has really helped out and got me through that tough time. Things are looking brighter now, but I want to continue because I enjoy maintaining that world. I want to expand the community and everything else. If you do have one of these and you want it animated and featured on the show, just send me the number and I'll make sure to get it done for you. Thank you so much again. And now let's jump into these crazy crypto markets. As pretty much everybody knows, last Friday, not long after the show, there was a liquidation across crypto that stemmed from Trump making an announcement indicating a strong escalation of the trade war between China and the United States. The drop was more severe than anything I can recall experiencing in the space, with many altcoins dropping more than 50% before recovering to an average of about down 15% after the drop. I missed the main spike down, but I did see it as a buying opportunity and picked up some XSAW. That said, the continued pressure throughout this week has me a bit concerned that we could remain under pressure. Bitcoin is down 8% on the week and 1.3% on the day to just over $106,000. HBAR is down 5.6% on the day and nearly 20% on the week to 16.2 cents, which is in line with the rest of the altcoin space, as we're still holding on to that number 20 spot on CoinMarketCap.com. At 16.2 cents, we're just over an area of weak support, and there's stronger support down between 12 and 13 cents. Now, these flushouts are not easy to deal with. I will say that there could be plenty of bull markets still ahead of us. We have a lot to be hopeful about. That said, that might have been it. Maybe we're going to go into a prolonged bear market once again, but it doesn't really bother me. And the reason is I have a set strategy. I know what I'm going to be doing regardless. There's plenty of growth. There's always a bull market someplace. And as long as you keep grinding and building and bringing value, you're going to get value out of it. That said, I do have that plan. I call it the Dynamic Investment Program. It pretty much has me buying and selling at certain levels based off of my average purchase price. And it had me selling whenever we were over 20 cents over the past year. Now, it was a small amount, only 0.2% of my position a week. And as you can do the calculation yourself, it would take almost 10 years of that for me to completely liquidate my HBAR position. Now, there was some times when we were over 30 cents, and during that time I was selling 0.3%, but I only caught a few above those levels. But at least I got something and took a little bit off the table. Now, I only took maybe 5 or 6% off the table during that time. I was, of course, thinking we were going to break $1, maybe $2, and really be able to liquidate, 50, 60, 70% of my position, preparing for that next bear market. But I also have been able to, through my options positions, my stocks, I have built up a fairly big cash position. I'm not sure exactly how I'm going to deploy that yet. I have some ideas, but we'll see. I'll take whatever the market gives me. Either way, just hang in there. We know there's a lot of value in the Hedera ecosystem, and we're going to continue driving forward. So the last thing I want to get into is what we're going to get into next week. On Sunday, we're going to try to get Brady back for another DeFi Corner. On Monday, we're going to do that DeFi Corner live. That's going to be at about 3 p.m. Eastern. So if you have any questions about the Hedera DeFi ecosystem, come back for that. I'm going to be doing an up-only gaming focus with the World Calisthenics Organization, Top Flight Football, and Karate Combat next week. I'm going to get on from Dropp, hopefully the founder of Pinnacle as well. I don't think I'm going to do a Shark Bites next week, and then I'm working on a couple other interviews that I might get fit in. I'm going to be going on vacation here in a couple weeks, so I want to make sure there's plenty of content while I'm gone as well. That's all I have for this week. We'll see you next time.